With world-class expertise and local insight, Dexus creates value not just for today, but long into tomorrow.
From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello, hello, and welcome to the COB. Really nice to be here with you. I'm Nadine Blaney.
And I'm Juliette Sarli. On a day when we saw the rally somewhat continue, Nadine, only up, I think, by something like around 1/3 of 1%, but encouragingly, we're adding to those gains from Monday, despite all that trepidation about the tariffs. I think it was really interesting, that BlackRock call too, about them being quite heavily into US equities. It sort of gave a bit of a boost to global sentiment.
Yep, so there is the COB Australia Index. You can see a little bit of waning sentiment toward the end of the session, but around 12 noon was all looking pretty good. I'm just keeping an eye on US futures, which are coming under a bit of pressure as we speak. So S&P 500 E-minis down by about 9 points, NASDAQ E-minis off by 48 points. Don't forget, we will be revisiting the market performance at the end of this show. So right now, the S&P ASX 200 is up by 0.2%.
All right, well, let's get to the themes of the day. And defensive dominance was the order of the day. CBA, the market leader, very much helping lift our market, and CSL looking solid as well, despite these concerns about the impact, of course, from the flagged pharma tariffs. I think it was interesting, though, what Mark Gardner put to us last week as well when this first got flagged, that he thinks, and others do too, that CSL does so many things that nobody else can really do. So it's probably likely to still be buffered. And Morgan Stanley saying CSL and ResMed were their picks, and they think that they can really weather the effect of the tariffs the most.
Yeah, well, I mean, CSL could be a buying opportunity, you would think, although today up by 2.4%. ResMed, I read a really interesting note from Citi yesterday. It was one of the worst performers, and that was because Citi says when Eli Lilly releases the trials for its new weight loss drug, could see some weakness around ResMed, but of course they still have a buy recommendation on the stock, and ResMed will report quarterlies as well. Don't forget, we've got US quarterlies continuing.
Yeah, Eli Lilly chief actually in Australia at the moment, and talking about our PBS system. Anyway, let's talk about the rearview mirror too. The RBA minutes were out today. Normally we would talk to our economist on set about them. Paul Bloxham was on set with me. We were like, these don't really matter.
No.
Amidst the what we've seen over the last couple of weeks, he is still sticking though to his 3 calls, so thinking the cash rate will be 3.35% by the end of the year.
Yeah, we heard from Michelle Bullock last week, so that the minutes obviously predate even that. Look, BlackRock, I think you just mentioned it, updating their call on U.S. equities. We'll get a view from our guest in studio with us, Martin Crabb. He is the CIO of Shaw Partners. We'll just run you through some of these sector performances first, including the banks.
The banks, yep.
Looking
there
pretty
we go.
good.
Well, I mentioned CBA, so up by 1%. That's always going to signal a positive session on the overall market. Looking at the healthcare players too, we touched there on CSL, on ResMed as well. How did they finish up the day's trade? CSL was up 2.4% there.
Consumer staples, so again, a bit of a change in sentiment here. I'd say that the left side of my screen, the banks, the miners, healthcare looking pretty good, but it gets a little bit less of an attractive color toward the right with communication services, consumer staples, tech now into negative territory, and some of the big energy plays along with the REITs. So quite a mixed picture. What's going on here with this? It's danger to look at yourself.
To the podcast, Nadine is fixing her hair.
Thank you.
Let's get to what happened locally in terms of the corporate stories. Perpetual. Look, it did see a 4% drop in assets under management. Shares down by almost 2% there.
Hub24, so it followed NetWealth's update the other day, recording record third quarter platform inflows of $4.9 billion, up 39% on the PCB. Including a large migration of $1.3 billion.
Evolution Mining had a good session today, saying it's on track to meet its full year guidance despite a drop in quarterly gold production, and of course the record high gold price helping out Evolution as well.
Collins Food, it came out with a new strategic plan. It's getting out of Taco Bell. Taco Bell International apparently might look to buy the business, so really sharpening its focus there. Look, EBR Systems, The US Centers for Medicare and Medicaid proposing its Y CRT system be reimbursed. Of course, always good when you get some government support.
And Clarity was another front runner in the healthcare space. It had some positive updates on its prostate cancer treatment. Auckland International a little bit weaker. Monthly traffic slumping, but Citi says that stock is a buy.
I will say Accent Group, I also thought was a really interesting story today. So it's going to be bringing that Sports Direct brand into Australia, and Fraser's, the UK parent of that brand, has bought a stake in Accent. That's the stock of the day. So we'll leave that there. Maybe park that for a bit. Get to Martin Crabb. He's sitting here, oh so well behaved from Shaw Partners. What's with the behaviour of the market the past couple of days?
By the dip, yeah. So interesting. I had lunch with Beta Shares today, and they're a massive ETF provider. Got about 50 bill, and they were just saying that they were seeing a lot. They saw a lot of retail buying on every day that was down, and so the punters are just buying the dip. So every night there's not bad news coming out of Washington. People are just seeing it as a buying opportunity. Now that's probably not how I'm seeing things. I'm more of in the sell the rally camp, but basically a no news day, the market creeps high because we're still recovering the ground that we've lost since the 19th of February when the market peaked. So, the S&P is off almost 1,000 points from its high. So we've still got a bit of ground to make up to reach the previous levels. But yeah, we're just seeing a wall of cash and people just using any day that's not bad news, put some money into the market. So we just crept higher. Interestingly, the market peaked around about the time the RBA minutes came out, which just, as you said, old news, but just reinforcing a little bit of a dovish tone from the RBA. And then sold off then, because I think once the futures opened midday our time, the US futures, we just saw a little bit of weakness there.
Yeah, just a note on the RBA. I think that the minutes did say something along the lines of, and I'm paraphrasing, but that May would be an opportune time to discuss. So is this the market essentially saying we're going to be getting an interest rate cut in May?
Yeah, the futures are still pointing to a less than 100% probability of a May cut. So they're still looking at like a 2/3 chance of a May cut, but most people have got it locked in. The issue is what happens after that. The economist we talked to, George Therineau at UBS, has got 2 cuts. The market's got 5.
Wow.
So 2.85 cash rate by this time next year. Fantastic news for borrowers. We've got $2 trillion of housing debt, most of which is floating. So you run 2.85% cash rates against that. That's a big chunk of money back in people's pockets. It's very positive for the economy if that happens. It also suggests economic growth in Australia is going to be very, very weak. So there's a bit of that's accommodative levels. So they think the neutral cash rate's around 3.25. So we go from having restrictive monetary policy to accommodative monetary policy over the next 12 months, which means a recession, right?
That money that might be in people's pockets, it's not being spent at Taco Bell?
No, it's Taco Bell. So I don't know about you, but we've got Guzman and Gomez, we've got Zambrero, we've got Mad Mex, and we've got Taco Bell. In fact,
which one would you go to?
I don't know if I've ever seen a Taco Bell. Where are they?
Yeah, there's one in Broadway.
Okay.
Yeah, there are a couple around, but they're hard to find.
Yeah.
And I'm old enough to remember Taco Bill. There's a Taco Bill in Melbourne. So yeah, we've got 5 or 6 different kinds of Mexican.
Just a Kiwi
like
accent?
Mex-Tex food's a fantastic concept, right? And it's very popular. But I think GYG is just killing everybody else. And Mad Mex, which is my favourite, which is almost a complete rip-off of Chipotle. If you've ever been to, you're from North America, Chipotle Mexican Grill. So that's very popular. So I think it's just a really, really crowded market. And these QSRs, these quick service restaurants, are all about getting scale. You've got to have lots and lots and lots of these places to make it work. And I think Taco Bell was just finding it difficult. So Collins Food moving on. So they're sticking with fried chicken. That's their, KFC, that's their big business. So tough out there in Mexican food land.
Is there value in Collins Food in your view?
Yeah, look, I'm a little bit dubious on quick service restaurants. I think a couple of operators, probably including Domino's here, maybe just rolled out too many stores too fast, and the profitability is not there for the franchisee the way it used to be. So I think it's just a bit tricky. I mean, I think at some point you buy it as a play on discretionary retail. We've seen the ANZ consumer sentiment numbers come out today, which dipped down again, which suggests that maybe the consumer recovery might take a bit longer. People are very nervous about what's happening globally, right? So I think it's probably a little bit too early to hook into a discretionary retailer like Collins Food at the moment. But maybe some value there.
But does that apply to GYG as well?
Yeah.
Because they came out with that update, was that last week?
Yeah, and they're going to pay dividends.
Yeah, I think the GYG is probably more of a store rollout story. I mean, I think KFC's been rolling out stores for 40 years, so they've got a big footprint already, and the growth really for them is in places like Germany. So you're really taking a view on Bavarians eating more roast chicken.
So why would you eat KFC when you've got all that great German food?
Yeah, I don't know. It's a great German food. I don't remember it being that great when I was there.
Yeah, I remember going to McDonald's in Munich.
I love the Weisswurst and the pretzel things.
Yeah, I just remember eating pork knuckle.
But I think if you're German, you probably,
And dumplings. They like dumplings as well.
Yes.
And drinking lots of beer.
Are we hungry or what?
All right, a little bit. Let's
talk
about Evolution Mining. We saw that.
Great day
today. Great day.
Yeah.
You're liking gold, as is everybody, but also copper.
Yeah. So look, Evolution's absolutely in the sweet spot. This is a company that, if I go back 12 or 18 months ago, had huge production problems. They'd bought way too many assets. They'd bought Red 5 and a few other things, and obviously the old Mount Isa assets. And they were really struggling to get these things to work. And the market said, you're overstretched, you're not getting operational efficiencies. And the stock was $3, and no one liked it. And now it's like over $8. So they seem to, and they had a quarterly today, they seem to have got on top of their operational issues, so they've bedded that down. They've given them, the market's given them a bit of a pat on the back for that. But also, it's our favourite commodity mix, copper and gold. Mm-hmm. So, it's one of the few large caps where you can get exposure to copper, because it's about 30% copper. Even with $5,000 Aussie gold price, copper's still very profitable for them. And Sandfire's the pure play. Sandfire's been having a run, but to find an ASX 100 listed company that's liquid and big and gives you exposure to your two favourite commodities, and it's turning its operations around, it's got everything going for it. Now at $8.30 or something, maybe a lot of that good news is in the price, but most people seem to be calling the gold price high from here. So how do we get exposure to that and pick up on the longer term theme of copper? So it is the stock everyone wants to own right now. So it's gone from being a feather duster to a rooster, right?
Yeah.
Martin, we have a federal election campaign on right now.
Do
in
we?
case you hadn't
Do
heard.
we really?
Yes, we
Okay,
do.
that's good to know.
Anything that is interesting you from an investment perspective so far coming from it?
No, other than the paucity of any sort of radical or imaginative, economic policy.
No
It's
kidding.
both sides are just devoid of it. I mean, they're trying to tackle housing by improving demand for it by making. It's like that's the wrong way to go. You've got to improve supply. Can we just go out and build? Can we go out and build 500,000 homes or something and just put it on the government balance sheet and we'll be fine. That's the sort of stuff they should be doing, not cutting, making interest deductibility for first home buyers. That just increases demand. That's not going to solve the problem.
And then just boost the pockets of those that already own homes.
Yeah, as a homeowner, I'm ecstatic about that policy, but it's not going to help the people it's designed to help. It's not going to. It's just going to make housing less affordable. So I think there's a little bit of a yawn. There's an Australian election coming up. It did look like a two-horse race. It's turned into a one-horse race, it seems.
Yeah, I was going to ask you about that, because it really does seem that the uncertainty is working in Albanese's favour somewhat.
Yeah, absolutely. Yeah. Look, there's the political theory that the greater the uncertainty, the more the incumbent. Because we don't like change, right? Yeah. We're seeing all this turmoil in the world. Can we not have any more turmoil here? Can we not change government? So I think that Trump, unfortunately for the conservative side of politics, is not doing them any favours at the moment. So you can almost do Trump's announcements on tariffs versus Dutton's approval rating, and they're almost completely correlated, right? As soon as the tariff stuff came out, the approval rating for the Conservatives just started to fall.
Yeah, I think the Fin might have written somewhere, Trump's the third person in this election campaign. It's a bit crowded.
Yeah.
Look, what do you say? Should we let you go? I don't know if it's pouring in Sydney right now, if the
sun's
sun's
pretty
coming
nice
out. What a day.
So, yeah, that's
let
very
you go
kind of you.
if it's pouring, if it's sunny, you have to stay.
I have to stay.
Martin, thank you as always. Martin Crabb from
Thank you, my pleasure.
And stock of the day.
It was Accent Group. So Michael Wayne from Medallion Financial and Mark Moreland from Value 3 weighed in on this one.
I think it's a continuation of positives for this company. It is very well run indeed. It would be probably, in my list anyway, top 5 Australian retailers, delivered very strong compound annual growth rates in revenue and earnings over the last probably decade or so. And as you say, they've got a nice collection of high quality brands exclusive distribution agreements on certain products and brands as well. They obviously run Athlete's Foot. Historically, that was on a franchisor model. They recently took that back in-house, so they're all sort of company-owned stores now going forward. So there's a lot to like about this company.
I checked the 10-year return on it because I've had it for about that long. It's been 22.8% average per year for a decade. So that puts it right up in the league of the superstars. And that's that same management that's gone through. The Frasers, it's a bit like it's a strategic acquisition from Fraser's point of view, and now we've seen some fruit of that because we were speculating on what may happen and whether Frasers would ultimately try and take over AX1, which you never know, they may still do that, who knows.
All right, let's have a look at the leaders and laggards in today's session. Kicking it off, I imagine, with some of those players like CSL and CBA. They had a good session. We also had, of course, Digico Infrastructure looking quite good. It was up by something like 4.5%.
So it was still down quite significantly over the past couple of sessions. So it's interesting to see by market cap, CSL the big winners, some of those big miners, but Nickel Industries topping the list by percentage changes, up by 5%. Iluka up by 5%. Clarity, and one of Martin's favorites, Evolution Mining, is up by 4.3% on the back of that production report. Some of the laggards though, Bellevue Gold down by 21%. So it has seen its price target cut by Goldman, by Macquarie, after it downgraded its production and looked to raise capital as well. Pinnacle, one of the worst performers, Treasury Wine Estate, and Hub24, even though it had that record sort of quarterly result coming through.
Yeah, all right. Do we have the small end of town? There we go. Meteoric Resources up 27%. Titomic also looking pretty good. 4D Medical and Centaurus Metals stronger as well. To the downside in the small end of town, not so smiley for Pacific Smiles, down 6.5%.
Unitemp as well, down to 23 cents per share. So tonight is the night that Americans have to get their tax receipts or file their tax reports, whatever they're called in the US. And on the data front, we get import and export prices. But again, what is any of this going to matter? Now that we've got tariffs and everything and an ever-changing tariff situation. So apparently the US is stepping up probes into pharma, chip imports, so setting the stage for I guess further detail on those tariffs.
Well, it's also earnings, and I think J&J, maybe Citi are among those releasing earnings tonight. And I was speaking to Hatem Diab earlier from Gerber Kawasaki, and it was the exact same point. Do these earnings even matter? Because the guidance is going to be so vague, and it's kind of very backward looking, as we know. All right, tomorrow locally, we have a very exciting MI leading index.
I'll leave that one there. In the UK, we've had some data out already. The labour market is showing signs of slowdown in the run-up to that employer tax hike coming through there. So wages up by 5.9% though, still in the 3 months to February. So we'll keep an eye on how that rolls through. And I'd say, Juliet, we could sort of limp to the finish here locally, and actually around the region. The rally sort of not looking crash hot right now. We've got Chinese markets, including the Hang Seng, off by about 0.5%. US futures are now pretty negative, so just managing to hold on to positive territory for the S&P ASX 200.
Yeah, just closing up 13 points, 0.2%, 7,761 is where we sit on the ASX 200. That does it for a gloomy Tuesday here in Sydney.
Yeah, we do hope that if you've got any time this evening to catch up with some of the amazing content that we've done throughout the day today, and we look forward to doing it all again tomorrow.
See you then.